Just put your hand. Good morning and welcome back to the Opportunistic Trader for November 21st, a Wednesday, pre-Thanksgiving. Very quiet in general on this day, and I want to really beat myself up today because the lesson I learned yesterday was I, again, tried to buy the market impatiently twice, and it cost me my day by 9:30, and it was utterly upsetting. And it cost me today. And as people that know me know that I knew today had an 80+% chance of being positive, at least on the opening, for Thanksgiving seasonality, I guess you'd call it. That being said, wasn't able to take advantage because I wouldn't call it undisciplined, because we were disciplined with the outs, which were upsetting. But we really had a wrong view of the market yesterday, and it cost us not being able to position for this morning. So it's lessons learned, and to be honest with you, it's I'm the hardest on myself that you can be. So I'm beating myself up. Not only did I lose money yesterday, I lost the opportunity to really do a trade that was much, much better, much easier, and obviously would have worked out. So that's my beating myself up. And for traders and people listening, patience is the hardest thing in trading. And my patience, I had a good day the day before. I thought that we were going to bottom, which we did in those levels, but timing is everything, and we got stopped out twice, and now we're higher than all the initial buys. So that's sort of how this works. Going across markets overnight, Asia was slightly mixed, Japan was slightly lower, and China was slightly higher, and Hong Kong was higher as well. And coming in this morning, the DAX is actually extremely strong, up about 1%. I'm assuming that we'll be up at some point today over 1%. We're up 80 basis points now, so you could probably get another 30, 40 basis points to the upside potentially. They're going to make it look weak. They're going to make them look struggly, but once midday rolls around, there's going to be no one here. And then obviously, the day after Thanksgiving is also bullish and heading into the holiday season. The only interesting thing is we have an extra week. So Thanksgiving isn't falling on the last day of, last weekend of November. So there's another full week to trade. We got the Fed coming up mid-month next month. And there's a lot, there's really a lot to talk about today.
Can I start with a question, Larry?
Sure.
All right. So just taking yesterday and moving it forward today. So you're looking for a higher move as we go into Thanksgiving, and you were a little bit early on buying the dips. Okay. So now here we are today. And I know that nothing is black and white. Do you have your eye on behavior if it sells off to look for a dip to buy for a stronger close?
If we get a sell-off of $10 off the high, maybe 10, 15 off the high, I would look to buy it. There's no trade.
Right, all the things being equal.
Yeah, there's no other trade. There's no other trade really here. There's a lot to talk about, though, as far as yesterday. The Bitcoin move was just insane. Traded down to 4,000 pretty much. And these altcoins are down 40, 50% on the week. And Bitcoin is down over 35%, on the month, maybe 40. There's a lot of inherent pain there. Obviously that's not it. The whole value, I think, of Bitcoin, that, when I say Bitcoin, I'm talking about the whole ICO blockchain. Right. I think it's only down. It's down under 100 billion or 150 billion. So it's funny that they have so much money sloshing around and speculating in a market that's really not that big. It's like it's a third the size of just Facebook. So
right.
It's and it's a 20th of Apple. So I don't know why everyone's so interested. I guess because I don't know if you've been reading these articles. I can't wait for them to get these guys that manipulated this market.
Oh yeah.
But this market was manipulated, probably the Winklevosses along with other people. They didn't have to do a lot. I'm reading a little into it. I don't know if you have a lot of knowledge on it, but I guess it's this tether that's tied to the dollar, and it's literally like
Yes.
not even really a trade, but it jams up. It jammed up Bitcoin, and there were no sellers,
Yeah.
and now there are really no buyers, and everybody's producing coins every day. And again, we're about 500 points right now off the bottom, so that's about 10%. But there's a lot more to go here. This thing isn't real, and they're going to figure that out at some point in time. And, the funny thing is, if you really look back a year ago, almost to this time, they were like, the blockchain, it's not really Bitcoin, it's about the blockchain. And the blockchain is nothing. Nobody needs the blockchain. It's just another, I guess, form of computing that they're using. So, again, I don't know a lot about it. I never believed in it. I still don't believe in it. It's not backed by anything, and people that are in it should be very careful, because not only does the SEC or any regulating body don't really regulate this, there's no recourse. If you have an altcoin, it could go to zero overnight. So you have to really be careful. But to
Right.
me, it's an amazing move. We're just watching it from the sideline, but every day is more amazing. Um, Going to the next market, unless do you have anything to add on my Bitcoin rant?
Divorce rate's going to go up.
No, I think when you lose all your money, your divorce rate goes down, right? Because there's not a lot to get, so you have
Yeah,
to.
that's
I don't know.
don't.
Listen,
Actually, you're
I'm
touching
not
on a very
even.
personal truth thing there.
I know.
Um,
I'm not going
um,
down that road. I'm
no,
going
but
on.
the joke is,
I'm going on 30
the five
years.
stages of Bitcoin are, there's a video going around I saw, and the last one is divorce. You know, anyway, whatever. Yes. Why would you get
Next
divorced?
year is my 30, so I don't know. Hopefully,
That's good.
I hope she's
Mazel
not
tov.
listening. She is not a member, but the hawk is, and but we'll see. We should be able to make it to 30, and overall, the most interesting market as well, and I'm sure you have a lot of knowledge and everything on this, is the move in crude oil yesterday. A friend of mine called me last night, and oil went down 7% in literally 35 minutes. It was a bloodbath. They literally squashed them. I think they hurt a lot of people. You know,
Yeah.
but I think it's all about positioning, and then these computer algorithms know the positions, or know through what orders come through the system, that they manipulate in front of the market.
Right. They see the depth of the market even when other
Well, they
people
see
don't.
that. No, they count the number. It's a really weird thing. They count the number of sellers. Like, they can count the sellers, so they count the sellers. They know there's 600 orders for sale, and 45 buyers. So they just go in and just smash the market. And really, you don't see it as prevalent in E-mini S&Ps. You do sometimes for a couple of minutes, but overall, you don't see that. And when you do, the markets move, but it's much more efficient. In oil, you can really make the market blast up or down $1 off of just flow,
Right.
So it's interesting to watch. But again, I think that move was positions liquidation from clearing firms, and
I think so.
it crushed people, because everybody thought the market had bottomed at like 55, 56.
Yep.
And it literally was trading pretty firm, to be honest. It was literally firm, and all of a sudden, out of nowhere, like, we looked up and it dropped like 5% in 2.5 minutes. So that was a big move.
Yeah. There's I don't feel like I understand exactly why, but I do understand that just looking at when I don't understand why, I look at who benefits and who gets hurt. And like you said, I think there's some whoever's left long liquidated. That's one thing as we're getting ready for the new year. A
I
lot of
think it
hedge
was a
funds do.
forced to really
I'm
look at
sorry.
it. I think it was a forced liquidation. I think it was like they knew people had to liquidate positions,
Right.
and it brings me to a topic. And it's funny. I listened to your report, and you were talking about how you wrote an anonymous article. And sometimes I talk about stuff like this, and really, it shouldn't be a problem to talk about. But
Right.
I feel like the exchange knows what's going on. They know
Right.
that the computer's front running every order you put in. Okay,
Right.
but there's big money involved, so they don't want to get involved in front of it. But I think there's a worse scenario. I think actually the clearing firms net aggregate positions, and they know. They just know. And I'm not going to name names of firms, but they know. They're smart. They got algos. They know. So if they know, like they knew once natural gas got above $3.50 that they could literally blow people out of the water, because what had happened was, if you look at nat gas, and I know you do, it sat between $2 and $3 for like 4 years. It never
Right.
moved. It got down to $1.80, got up to $3. Everyone thought at three it was going to go. It never went. And then what happened was these option sellers were selling very, very low premiums, and it really cost them, because the market exploded up. And again, you have much more experience in this. You've traded so many commodities and whatnot that are liquid. Like my background is really, S&P, OEX, SPX, all the most highly liquid things. And for us, taking out a couple of crash days over 30 years, and taking out maybe one or two outliers, we never see anything like that. A huge move is 3 or 4% huge. Natural
Right.
gas went up 50% in like 2 days. so I think that people knew that this guy, I guess, whatever's your favorite friend now, Cormier or whatever his name is, was
Yeah. I don't even know
short.
what his real name is, but yeah, Cordier.
But
Yeah.
yeah,
It
so
it wasn't even a massive. It wasn't even massive. That's the point. Like, I don't think he's the only guy who blew out. To your point, I think he's the one that admitted it. You know what I mean? And he didn't lose any money. His clients did. But yeah, I mean, other people got hosed really badly.
you know what's funny? You're right about that. When I watched it, and I actually sent it to a friend of mine yesterday, who's a doctor and he loves the market, but he, you know, he called me back and he's like, "That guy didn't lose any money." I'm like, "You're right. Like, if
Yep.
you really lost all your money, forget your clients, but if you lost all your money and you were, a real human being, you wouldn't do a video like that, and B, you would be, if God forbid, if that was me, I would be rolled out in like a ring. You would think I didn't shave for a year, that I looked like, this guy looked like he was a movie star."
Well, he was selling again. He was selling. He was dropping names to sell for the next whatever thing he does. He's done it before, but like
Oh,
the
really?
point is, it wasn't a lot of money that was lost
It
either
wasn't?
compared to other, compared to um, the amount of other. I think a lot of other people got ripped, had their faces ripped off. He's just the point of the spear, so to speak. It's like average
Oh,
five
oh,
hundred
you don't
thousand.
think he? Oh, really? I thought he had a few hundred million under management at least.
Oh no, I'm not. I'm not saying it. I'm not saying it wasn't. I wasn't saying that. What I'm saying is,
And I think he
his
went
investors.
deficit
He
into the clearing
advises
firm.
people with a minimum of $250,000 to an average of, let's call it a little under $1 million. Let's call it $1 million. So each client has $1 million. He had $290 million. So let's call it 290 clients. Let's call it 300 clients. So he lost $300+ million. That's not really, that's nothing compared to what was lost in that move. You know what I mean?
I
Like,
guess I don't know the position.
but
I don't know the open interest.
because it affects retail individuals, it's more high profile. Believe me, hedge funds, as you know, wouldn't disclose their losses until afterwards, after the gates come up and they've close their positions. There's a lot of blood out there. He's not the only one. Let's put it that way.
But I mean, did you ever look at the open interest? Like, I didn't look at the strike open interest, but it would be interesting to see what it was and where the pain came in.
I didn't look at the open interest.
I think this guy was a way out of the money seller. I don't think
Yeah.
he was selling anything near. I think he was selling like what we used to call teenies. They don't
Yeah.
do teenies anymore, but
5 delta or less type of area.
there was a guy. Let me tell you something. There was a guy who traded with us who was probably one of the most successful guys. His name was Bill Toll, and all he did was sell options at a teeny. So did nothing else. Made a career out of that, and he owns an island in Palm Beach. So
that's awesome.
I'm just telling you, he would come. There were no position limits back then. None.
Right.
You had no position limit, so it was very. He could sell 50. He would sell 50,000 options at a teeny, and they were way, way away. He did them mostly in deal stocks, so like announced deal stocks. And, I think he had a couple of problems in his career, but overall.
But ultimately, the FCM in those days probably didn't manage the risk as well.
No,
and
they didn't have any idea what was going on.
He was long the FCM put.
Yeah, I mean, they were giving it to him. But this guy, it was interesting to watch him, talk on this video, and it was very. All I'll say is it was very strange.
The strategy, I think, worth noting is a lot of these guys, when they do it right, even when they lose money, when they do it right, and you make a lot of money doing this. You'll sell an out of the money strangle. Let's say you're taking a 5 delta call and a 5 delta put, and they'll sell it in natural gas, and then the market rallies, and they don't understand something called what I call stochastic volatility process, which really is like saying, as the market goes higher, vol blows out, kind of like you have it on the put side in oil, and you have it on the put side in the S&P. In natural gas, during winter, the call skew determines volatility if we go higher. So here's what they do when they don't understand it. The market goes up, volatility starts to move higher, and they say, well, here's what we're going to do. We're going to either roll our short call higher, okay, so they buy a call spread. This is what the smart strangle sellers do, or we're going to sell more puts. Now, or both. Let's say vol goes from 30 to 60%, and they say, oh, well, we're going up, we'll just sell more puts because our calls are killing us. They sell more puts, the market goes up, the futures market goes up 10, 20, 30, 40%, and the put's the same price. They're not making any money off of it, but the span margin risk widens, and an option that was a 10 delta that's still $1 out of the money is now a 30 delta, and it's tripled in value, and it's not even in the money, and you don't have any money on the side to pony up to cover your margin. That's the problem with this. It's like you're playing poker. You've got 4 aces, and there's a possibility the guy across from you has a royal flush. And are you going to go all in? Okay, maybe you will, but you know what? The point of playing the strangle selling game is to be able to play it over and over and over again. So you're going to keep some money in reserve, even though you're 99% sure you're going to win. And there's no margin money in reserve for these type of things because people take their money out as dividends. And he takes his money out as dividends. And by he, I mean, not the money he risked, the money he gets as a percentage for advising. There's going to be clawbacks and lawsuits, that's for sure.
Yeah,
so they're not even doing it right.
Where are they going to get the money from?
Well,
from the clearing firm. That's the only place.
I think if you have, let's say you have a client, you have an advisor, not a CTA, an advisor. And by that I mean the person's really an introducing broker who on some level guarantees and gives out research. Because if you look at his background, he had another company called Liberty that I think was a CTA that blew out, that is no longer a CTA. So he came back in this form, which is, like that guy you talk about on YouTube, drinking Red Bull and beer and saying, I'm up 5,000%, But anyway, what ends up happening, I think in terms of the clawback, the client blows out, the client goes into deficit, and the client says, no, I'm not paying. and just to take it down the path to litigation, then the FCM says, well, we're going to, put a debt collector on you, because that's what it really comes down to. But what ends up happening is all the clients that lost money end up banding together, and there's a class action lawsuit filed against the advisor for not explaining risks good enough. Then it becomes a matter of, were risks explained or not? And the FCM, they could be on either side of the table depending on how they manage the risk. And I think in this day and age, the FCM won't be in trouble for mismanaging risk, because they're strictly FCMs and exchanges are much more closely guarded and protected since the too big to fail banks. The government is very big on consolidating risk in exchanges now. And I think the FCMs that have survived, you remember all the big consolidations,
Mm-hmm.
The ones that have survived toe the line, and they have the balance sheets to survive. I don't think the FCM would be at fault here, but I think, and I don't. Cortier's got money, and they're going to come after it. I don't know what's going to happen to him. I think that's how good his lawyer is. But
I don't know what he
that's it.
has and what he doesn't have.
Well, blame the cigarette company because you can't quit smoking. I'm not saying that cigarette companies didn't know that they were selling something that could hurt you. I will say this. I don't know if Cordier was willfully or naturally ignorant, but he certainly wasn't looking at the risk of options. He was selling it, if you read his articles, on the fundamentals of the market.
But the simple vanilla is, if that guy had bought a wing for no money, literally no money, he'd be here. But they didn't want to spend it. But I don't really want to.
No, but that's actually a great point. Not about him. A lot of hedge funds. When I was trading on the floor, I'm like, that's a hedge fund that's bearish. Why are they buying the 5 Delta call? And I got schooled by the guy who was running GSCI, and he said, well, they're a hedge fund, and they are permitted to be, and they have a big bet on short, but they must protect their clients. They need to be in the game. So they buy that wing call. Even if they lose a lot of money, they don't lose everything. And that's your point. You have to have an insurance policy. You have to stop yourself out one way or another.
Listen, for sure. And that's important. But let's get away from this guy, even though
sure.
we want to talk about him. Let's look at Straddle today is pricing. It is an expiration quiet day. It's pricing $20. It's a 21 vol. That's actually pretty cheap for the day overall for the vol. I had a discussion yesterday with I think it was Bloomberg. And I was explaining the skew and the volatility, and it's still interesting, although the vol, it's getting close to expiration, so it's sort of at parity. But the back month vol skew is really weird, again, pricing in that they're looking for some type of rally at some point. Again, we talked about this before. The S&P is down 10 handles for the year or less now, and we move 50 handles a day. So it's
it's beautiful for you.
Yeah, I do.
Right?
I do think two things. I do think we're going to take out the low at 2,600-ish on this move. Not today, probably at some point next week. And from there, we could take out, depending on how fast we hit it, the low of February into the Fed meeting. The Fed is going. I would be shocked.
What do you mean the Fed is going? The Fed is going where?
The Fed
Florida?
is going to raise rates. The Fed is going. So the chances have been coming down. I think Fed funds are only at 71%, which it was at 95. So maybe he won't go. But if he doesn't go, he will have so much egg on his face, and it'll be Trump's victory lap. And I don't know if you noticed yesterday, Trump tweeted during the day that he thinks the Fed should lower rates. He's so classic.
Yes. Wait. The comment was, and I do want to stay on the topic of what you said directionally and how the Fed because you and I diverge on opinions on this, but I do want to note the comment. The Fed should lower rates, and I want oil lower. And I felt like saying, how much more, lower?
Well, he has he has the Saudis in his back pocket, because he's somehow the only one in the United States that wants to do business with Saudi Arabia and thinks they're okay. I think he has too many hotels that are backed by them, so we'll see.
How much does oil have to drop per journalist, killed in Saudi Arabia? It's ridiculous.
It's actually amazing.
It's pretty sick when you think about it. About the Fed. Okay. I think it's just a fact that they're going to have one more hike. I'm just responding to a subscriber. You and I diverge here, right? I think, and we're not really far apart. I think we do get a back off on QT and Powell backing off when the S&P goes to 2,200. You think it might happen sooner? I think we both agree that he has to raise rates. Has to be in quotes, raise rates this year, and he may back off next year. And I just think he'll back off at a lower level in stocks than perhaps you do. But I do want to note this. I'm not backing off my position, but I do want to note this. And this is me talking to him, taking the you better lower rates side of the table. Here I am talking to Powell. Hey, Mr. Powell, the reason that you're semi-aggressively doing QT is because you're worried about an overheated economy. I'm with you on that. Did you notice that oil dropped, 20%? See, he now has, and I still think he's not going to, I'm saying he's got cover now. He has cover to say, I've rethought it since oil has dropped so much. He could save his face and give the market what he wants in 2019. If oil stays down here, he does have an excuse to go to make me less sanguine in my own opinion and come a little bit closer to your opinion. I still think he's not going to back off on QT, but I'm aware of the fact that he now has some good excuses.
I hope he doesn't, and I don't think he will either. I'm in your camp. I just think that he may do a raise and then say, hey, everyone's looking for 3 next year. Now they're down to 2. He might not even, say anything. He might say that they're going to wait.
No, I agree. That's a good point.
I don't know why that's so good. Obviously, we've been talking about it for a week that CEOs and, the housing market is literally telling us that the market is significantly slower than what's being shown. So that being said, he probably should slow down, but he wants to normalize rates. Rates have been too low for too long. They probably should have done this trade, with Yellen, but she was so asleep at the switch that she didn't do anything for her whole
sell
term.
Button was not on her keyboard. They took the S button off.
I know, it's crazy. She was like, and then you never heard from her again. I mean, it's just pretty amazing. I think she had the shortest term. I think it was shorter than Bernanke for sure. And
well, her speaking, she's now coming out speaking publicly, and every Fed governor, once they leave, they say the opposite of what they did should happen now. She's actually starting to come out.
You gotta love Greenie. You gotta love Greenspan. You just gotta love him. He's still out there. I think he's 90. I could be wrong, but he's got to be close to 90, and he's out there talking all the time. But,
he's like talking gold again. Gold is great. I mean, he used to be the Ayn Rand type, well, you can look it up if you don't know what I'm talking about. Anyone who's in the markets understands what I'm talking about, egoism and things like that. And he wrote an article about, gold and how, and it's not about gold. This is about stable money supply. Then he becomes the Fed chair and poof, that goes away. In fact, I have insight into his relationship with Robert Rubin and how they started the gold carry trade under Clinton. Then he leaves, right? And as you said, then he starts coming out, anti-bubble. He's 90. He's still out there. And his wife is Andrea Mitchell. Did you know that?
Yeah, of course. It's pretty amazing.
Anyway, but the only person who really hasn't recanted the whole philosophy of easy money is Bernanke. He really, I guess he's still working for someone that benefits from it.
Yeah.
But so I want to go back to the market itself, please, because after a big down day yesterday and we're coming in
It
higher.
was two big down days. It was back to back 40 and 50. So
I'm sorry, I meant to say a big down week yesterday. Um, um, and then the market comes back. It really does. It really does kind of stink, because it would be nice to come in a little bit lower and look to buy a dip, or who wants to sell a rally up here as you go into a holiday? It's kind of annoying. Would you consider,
no, I
because
think
it expires today? No, hear me out. Would you
okay, I'm
consider,
sorry.
because it expires today? Well, I look at a 3-day move like this and I say we might have a breather. Would you consider, not do, but would you consider selling with appropriate stops and levels of protection, just selling a straddle today?
I think it's a good play. I'm not going to do it, but I think it's a good play. I think
If
that's
you had to do it, and
yeah,
I
I
know you
said I
don't.
think it's a good
No, no,
play.
no. This is in different trades. This is what we talk about in risk. If you had to do it and you can only buy a stop out option on one side, uh, and you couldn't trade for the rest of the day, and these are ridiculous questions, but I asked them: would you sell the straddle and buy a put or buy a call? You're allowed to trade futures. You're just not allowed to trade the options for the rest of the day.
No, I always would buy a put just in case. I'm not
I
ever
know, right?
scared of the
I
upside.
know. Okay.
But,
I know.
I don't love it. I think today, unless I see something crazy, I mean, I don't see a trade. We missed the move. It's 20 handles higher. If you sell here, you could lose a quick 10 handles because they're going to mark their book.
But what about the axiom, Larry? What about the axiom? Right. I want to share this thing. You make a common sense statement. What about you remember the phrase "the hardest trade"? Like, the hardest trade is buying when we're up 20. And I'm not talking as a momentum trader. I'm talking as a guy, say, who has negative gamma. It's up 20. The hardest trade is to buy. Like, could we recoup the whole? I know we could do anything, but
No,
would you consider buying into strength on a day like today? And why not? If not, do you
Well,
feel it's
I don't like to
overextended?
buy into strength in a market that's been very, very weak. The only problem that we have is we're at 2660. I think we're down 80 point. I think we started the week at 2730. I could be wrong on that. Maybe it's 2711. But we're down 60 handles, even being up 20 today. So 20 is not enough. But I don't like.
I got you.
I think it's a no trade. It's a holiday trade. They did what they had to today. The only thing is, these are the days, and because you've done it forever and ever and ever.
Right, lighter volume, bigger moves,
and then
more
it just
fun.
goes straight up, and you get your head ripped off. You're like selling them up 20, then they're up 30, then they're up 40, and you're just sitting there scratching your head, saying this doesn't make any sense. So we could have one of those. We could be range bound. But, there's a lot of different variables out there. The Bitcoin, terrible. A lot of money lost there. Natural gas, a lot of money lost there. Also made, obviously, but a lot of money lost there. A lot of money was lost in oil. We were short oil at $76 and we were scared. Now it's $53. It went down 25 points on 70. It's down huge. It's almost down 40%. That's just a massive move. So
yeah, I think a point that's valid and could make for good trading between now and the end of the year, especially between now and the end of the week. I think people who need to square up will be squaring up. So positions will be closing, open interest will be going down, and that's good opportunity because you get irrational buyers and irrational sellers, especially if you're trading a 15-minute chart or an hourly chart. It might be good if you're trading
you're
small
also
volume.
coming into the last week of the month. The month is actually, I think we started the month at 2690 and some change. We actually were up like 50 handles at one point, almost 2%, and now we're down. As of yesterday, we were down over 2%, and now we're coming back to being down only 1.25%. So the last week is going to be really, really important. And I think Trump meets on the 29th. I don't know what day that falls on. So I guess that might fall on a Friday, a Thursday.
You talking about the G20 meeting?
Yeah.
In Argentina?
Is that on a weekend? I don't know if it might be Friday or Saturday, but that's the real next big catalyst to take us either significantly lower,
That's true. That's
so
true.
we'll see. We'll
That's
see.
true.
Goldman looks terrible. Stock is $190 down 25%. There are so many stocks down 25%. AT&T down 25%. GE down 40%. IBM down 30%. I mean, I could rattle off a zillion of them. So there's some value out there. Micron traded the year low yesterday at 34, bounced a little bit. I just think today will be quiet. Stay out of the way. Apple looks interesting. It's probably too cheap in here. It faced like 9 downgrades. I was reading Goldman downgraded it twice in a month.
And Goldman itself was downgraded by Morgan Stanley. So the cannibalism starts in the banking sector.
Yeah. So today is a throwaway day. It's a be careful day. The market could trade $10 to $15 higher than this potentially. I think it will not come in, but maybe we will. But it's just completely oversold, and they have them on the run. Oil bounced a little. It was actually up $1.50 before. Now it's only up 94 cents. See if that holds. I think that's trading like with Bitcoin. Bitcoin was up 7%. Right? Now it's up 3%. It looks like it's ready to get crashed. So
everything's entirely correlated and not correlated at the same time. I want to throw something out there for people to think about going into the end of the year. It's not a macro comment, but it is this. I've seen this pattern before, and Larry, you probably see it even more or recognize it quicker. A lot of times, analysts will downgrade a stock after their guidance will be not downgrade. A company will lower its expectations of earnings, kind of like setting the table for maybe a stock pop. The analyst will then lower their guidance for the earnings. The stock will sell off, and then the holiday season puts them positioned to have a nice spike if Good Friday is big. All I'm saying is, let's be honest. We're all honest here, but let's be frank. Since companies have been forced to toe the line on a quarterly basis, they do their own management of expectations, and you'll see we expect lower earnings. That ends up making for a nice spike later. Apple's a different animal altogether. But note that for the last couple months, since all the hedge fund managers have been saying a recession is nigh, the companies have been lowering expectations for earnings per share. Analysts have been following suit, and now stocks are coming off. And I'm not saying the Cabbage Patch doll is going to save Amazon this year, but I am saying you could have a bounce if we have a nice holiday, a Good Friday reason to buy. That's all. I mean, it's just we could be getting set up for end of the year. Here's your Christmas present, Larry. We could be getting set up for an end of the year stock market rally that puts us up 2 or 3% for the year, and then you can have all the fun you want next year.
Yep,
I'm with you on
to a new year. So I'm not opinionated. I'm bearish overall. I'm not opinionated today. The market could trade up another 10 handles from here and still remain a little bit oversold for the week. We'll keep an eye on everything. The schedule is light. All our experts are vacationing in the Caribbean for Thanksgiving. No, I'm only kidding. Our experts have stuff going on. So today will be a light day. I'll be here in the chat and on throughout the day. And if people aren't on later, I wish everybody a happy holiday. Enjoy it. And I look forward to getting back after the holiday and getting back to trading for real. And not having, like, today is a noise trading day. You got to be careful. Any closing thoughts, Vince, on anything you want to give?
For the FX guys out there, all the emerging markets, like we have been talking for a long time. Remember, we're talking about Turkey and it's better now, it's not better. Just a comment. All the emerging markets have been crushed, and now I think you have to be careful because earnings per share are going to start coming out, and that's, I think, going to cause another divergence. So we could have a 5% leg lower in our stocks, but then the earnings per share are going to come out in these emerging markets that have been decimated on the FX side, and they're not going to be able to do anything to support their own currency. So I'm just saying, I think if you're leaning towards the sell side, let's say in the Aussie dollar, you may have more reason to sell the Aussie dollar and or the Aussie market, because now the fundamentals will kick in. Earnings per share out, they're going to come out, and that's going to be worse. I'm just saying, I think we could be in another leg lower for emerging markets, and let's see what that does for us, which doesn't help you trade today. I'm just going to trade around it a little bit today.
Okay. Well, I don't really see much. Apple bounced a little. It still looks not great. They're going to try to hold it. And Amazon's up a lot. I saw some news. I'm sure they're like shipping 8 gazillion packages or whatever. They're like they're like FedEx.
This is the Christmas stuff. This is we anticipate, here it comes. Here comes the suckers play. Someone's going to get burnt.
NASDAQ is up almost 100. So again, the straddles are pricing around 20. They're probably a sale. Market should hold in here. You could buy some dips if it happens. We expect the market to potentially trade up another 10 to 15 handles. But again, that may not happen. But we'll be back to everyone in the chat. And I wish everyone a great trading day and a good holiday. Vince, thank you as always.
Thank you, Larry.
All right, have a great day.